Greetings from Aaron Layman Properties. Today we're going to check in on the North Texas housing market as we approach the Christmas holiday season heading into 2025. Denton County's housing market perked up last month. Post-election enthusiasm and renewed animal spirits helped push up home sales 10%. Median home prices jumped 2.2% year over year in November. Average prices rose even more, but the disconnect in the market continued. Wealthy property owners continue to skew the overall picture for the North Texas housing market, including the prices. Area land prices are still grossly inflated. The housing market isn't nearly as healthy as many agents would have you believe. The jump in the sales activity is certainly welcome, but it would be foolish, spelled intellectually dishonest, to call the current real estate environment healthy. We continue to see a huge disconnect between home prices and local incomes. This has been a defining feature of the post-COVID real estate market. Too much liquidity and heightened investor activity are pushing up the prices at the margins. At the same time, normal working families and first-time buyers are struggling to keep up with inflation. First-time buyers remain at historic lows in terms of overall percentage of transactions. The buy versus rent premium still favors renting. The premium for buying a home with anything less than 20% down payment continues to favor renting in the DFW market. Too high home prices translate to high carrying costs. That includes record high property taxes and record high insurance costs. While home prices in Denton County remain near all-time highs, average rents have started to cool. Average single-family rental prices fell 2.6% year-over-year in November. Apartment List shows 3.5% year-over-year drop for Denton, Texas apartment rents. Inflation is still raging. Inflation continues to wreak havoc with consumers and their budgets. Asset owners and wealthier property owners are doing just fine, but millions of Americans realize the economy isn't working for them. Major health insurance companies are raking in billions of profits while they deny claims for care. Home prices remain out of reach for many young families who want to join the property ladder. Investor activity in the housing market is still all the rage, however. Developers are also rejoicing at the thought of even more tax breaks for those opportunity zones with the incoming administration. Headline and core inflation have stabilized well above 2%, but many investors and Federal Reserve officials still believe there's room for more rate cuts. It's almost like they enjoy perpetually high and growing asset prices. Many economists continue to talk up the disinflation idea, but actual prices tell a different story. The Fed hasn't defeated inflation, not by a long shot. This is why it's reckless for the incoming administration to even mention tax cuts to stimulate more growth. The new Office of Government Efficiency seems to be keen on cutting grandma's pension if they can use that money to feed more military exploits or make the billionaires even richer. The Federal Reserve ended the year by tossing a lump of coal in investor stockings. Current 10-year Treasury yields and mortgage rates are simply a reflection of the Fed's policy errors since September. It seems we're living in the golden age of fraud and Ponzi schemes. I guess it should come as no surprise that Fartcoin, yes, Fartcoin is actually a real thing, reached a market cap of over $1.2 billion. That's larger than roughly half of the U.S. publicly traded corporations. Lennar lays an egg for Christmas. Home-building giant Lennar laid an egg for their fourth quarter earnings report. Lennar reported a 7% decrease in closings for Q4 and a 3% decline in new orders. Lennar mentioned the challenging rate environment as a cause for disappointing numbers. Quote, while demand remained strong and the chronic supply shortage continued to drive the market, our results were driven by affordability limitations from higher interest rates. That was Lennar CEO Stuart Miller. Don't feel too bad for Lennar, however. The company still had net earnings of $1.1 billion for the quarter and $3.9 billion for 2024. For the fiscal year, Lennar spent $2.1 billion on share repurchases. It looks like those purchases are all now underwater with the recent slide in the stock price. Lennar could have spent that $2 billion building more or better quality homes. Instead, they chose to enrich executive staff and shareholders. That's before we even get to the issue of Lennar offering some sweetheart deals to private equity vultures on their affordable inventory. At least here locally, Lennar is making some deals for cash investors while FHA and other mortgage buyers pay much higher retail prices on some of the ugliest housing you can imagine. The bifurcation continues. The market for home buyers and sellers continues to be bifurcated and dislocated. Home sellers and builders still have it pretty good. There's ample liquidity and prices remain elevated. Demand is still pretty solid, particularly with cash buyers and wealthier existing asset owners. The flip side is there is weaker demand for this savagely unhealthy housing market where median buyers are struggling to make the math work on monthly payments which are simply unaffordable. There's a reason why builders are still offering rate buydowns and big incentives to move new homes. They have to if they want to get money buyers to the closing table at these prices. If you need some help with your North Texas home purchase or sale, you know where to find me. Thanks for listening.